What is up, ladies and gentlemen, and welcome back to Casual Cash. As investors, it's our number one priority to make sure that we are making profits and growing our portfolio, but this year has made it incredibly difficult to do that. With rising inflation, higher interest rates, wars, and an increased cost of living, most companies' share prices have gone down. And although we've been taking the opportunity to buy in at a lower price, it doesn't mean that all companies struggled. In fact, some thrived and some even tripled their share prices. So in today's episode, we'll be counting down the 15 highest performing shares of 2022, as well as looking at the best ways to identify those top growing companies for next year. So stay tuned and let's get started. Now, I'm a big believer that you cannot predict the future, but you can learn from the past. Churchill said those that fail to learn from history are doomed to repeat it. But on the other hand, when it comes to investing in the stock market, the more we know from the past, the better we will be able to profit from the future. Here's a quick example. In one of our videos, we talked about Sasol and how their share price was reliant on the oil price. When the oil price went down, so did its share price, and vice versa when it went up. So if we had known this, then when Russia invaded Ukraine in February and the oil price surged on increased demand, we might have known to buy Sasol and we would have made 113% profit in just 4 months. I didn't buy it back then, but knowing what I know now, should I see the oil price go up in the future, I know exactly what to do when it happens. But it also shows us where to look for high-performing companies. Capitec was pretty much doubling its share price each year from 2010, and if we had reviewed it as a high-performing share back then, like we're doing now, and invested, we would have made 2,372% since then. Now, it's important to remember that past performance doesn't ensure future performance, but it's always worth knowing and learning to become a better investor and maybe invest in some of them yourselves. That's why in today's video, we're going to count down the top share growth companies of 2022, finishing off with the whopping growth of the share sitting at number 1. So let's get right to it. But first of all, let's also take a quick look at the biggest losers. So these right here are the 15 worst performing shares over the last year. We won't go into too much detail on these, but just for information, here we go. First, we have Advanced Health with a drop of 50% on its share price, followed by Labat Africa, then Nampak, Jasco Electronics Holdings, RMB Holdings, which has been unbundling its companies, PPC Cement, which went up by 300% last year, now down by 60%, Delta Property Fund, Visual International Holdings, AYO Technology Solutions, Murray & Roberts, which was shooting up in 2007, but has had a very tough time since then Brickor, PSG Group, and the bottom 3 are Finbond Group with 79% decline, Afristrat Investment Holdings at 90% drop, and the worst performer is Conduit Capital with a 95% drop in its share price. As of today, it is 99.94% drop over 1 year, and it was suspended on the JSE because its largest holding was liquidated during the course of the year. Crazy. Okay, so now we've seen the worst, let's jump right in and take a look at the absolute best. So just a quick step back, the information we are using here is from a company called Simply Wall Street, where they give a breakdown of 245 companies on the JSE, which we have exported into Excel and sorted it to show the lowest and highest gains over the period of 1 year up to the 7th of November 2022. I get asked a lot for my Excel sheets and budgets and investment trackers, and I'm working on a way to be able to get this to everybody who wants them. Before we get to the top 15, here are numbers 15 to 30. As you can see, there are quite a few banks in there who benefit from interest rate hikes, and a few in the mining sector because commodity prices went up after Ukraine, and a few more financial and tech companies. Okay, so starting with number 15, we have Alviva Holdings at 54%. This is a tech and software company firing on all cylinders with revenue up 57%, earnings per share up 91%, and their dividend payment up 90% from last year. Then at 14, we have Etienne with 61% growth, which I think isn't as much good performance as it was a slight uptick from a low base of decreased earnings in the last 14 years. Then Premier Fishing and Brands at 62%. Again, this is more a slight uptick from a low share price of 80 cents from years of decreasing revenue, although there might still be some value on the line for this one. Now Rex Trueform Group, which owns Queen's Park and a few other properties, during this year changed its CEO and bought a 51% stake in Bulper Investments, which I guess people liked with 64%. ARB Holdings at 65% is an interesting one because it was bought out by Massimong and Sabvest, who is number 16 on this list, at a high premium to its share price. So the share price soared on the offer and delisted when the offer closed. Then there is Santova, a logistics company at 70% growth over 1 year. But if you look back slightly, it has grown by 500% since early 2020. I read a great article on MoneyWeb that I copied here because you have to pay for it, but they claim it is a very small stock with great growth potential and one to watch or possibly buy. So I'll let you look into that one, Santova. Then PBT Group with 72%, a consulting company whose earnings grew by 52% this last year. On to Novus Holdings with 75% share growth, a commercial printing company that struggled with losses in the last years, and this year finally went back into profit and acquired 75% of Pearson South Africa. Next up in 7th place is Transpaco with 76% that produces and recycles papers and plastics. Probably the main reason here is the increase in dividend distributions by 40% from the prior year. Now, this is interesting. Here we have Stefanati Stock Holdings. This share has lost 93% of its share price due to poor performance and annual losses for the last few years. But those losses are slowly getting smaller and it may go to a small profit soon. That was enough for investors to give it 80% growth this year. Guys, isn't it interesting how so many of these huge share price growths are from small companies who have performed terribly over a long period of time? Basically, if the share price drops from 100 Rand to 1 Rand, if it goes up even slightly to 2 Rand, then you've made 100% profit. So maybe something to think about a bit more in our portfolios. Guys, Lux Holdings is so fascinating. Yes, you can see it has a 100% price increase because it went from 200 Rand to about 400 Rand, and then boom, news comes out that Lux has been suspended on the JSE due to not submitting its financial results due to accounting irregularities. I've never heard of this, but it sounds to me like Steinhoff, so for now, steer far away from this one. Then onto Grindrod. This is just a simple story of a company that was on hard times, but this year became profitable and announced a dividend. Enough good news to earn it 4th place with 102% growth. Now we are already onto the top 3. In 3rd position is Hoskin Consolidated Investments, or HCI. They have investment interests in hospitality and gaming, transport and property. So simply put, every single industry that got hit hard by COVID. And in this year, their earnings grew by 95%. So its share graph had an extremely sharp V-shape, and now is showing some great results. And although its earnings are still not strong, its recovery from the pandemic justifies this growth for now, with a whopping 133% growth in recession times. Incredible. The number 2 spot belongs to African Dawn Capital with a major 175% growth in 1 year. But let's not get excited just yet. This is another share that lost 99.75% of its share price and makes less than $1 million revenue a year. Its share price is 24 cents, up from 9 cents 1 year ago. But just 1 month ago, it was at 7 cents. So you would have either lost 22% or made 175% just between those 30 days. They were also penalized for submitting late JSE financials, which is almost always a bad sign. All I'll say is be wary of this one. And then we have come to the main event, the top spot, the highest growing share for the last year. In the number 1 spot, we have none other then Thungela Resources at a mind-numbing 319% share growth. You would have quadrupled your money if you invested late last year, not to mention they paid a 42% dividend and have earnings growth of, I can't even say it, 65,791%. Guys, these are astronomical numbers. Congrats to all who invested in the share, and I know there are a few people on the channel who did. With that being said, just a few months ago, we did a full deep dive into the Thungela business and share price, and I'll be honest, there were a few things that concerned me. Their huge growth came from high commodities prices, but that and a few other reasons mean it could fall just as quickly if the tides turn. So if you have a few minutes, feel free to check that out before investing in this one. And guys, that is it for today's episode, where we counted down the companies with the 15 highest share price growths for this year. I found it incredibly interesting to see why they grew like they did, and honestly, I was quite shocked and surprised by a few. But if you enjoyed it, please consider to like the video, and if you want more market updates, tips and tricks, and rundowns of our own portfolio, please feel free to subscribe to the channel. But until then, I'll see you guys next time, as always, on Casual Cash. Cheers.